First Liberty National Bank.
Hello, and thank you for joining us on Our 2 Cents. This is Carrie, and today I have got Miss Patty Stretcher. She is the Director of Mortgage Services with First Liberty National Bank, and we have just opened, and the doors are open to our full-service mortgage center. It's at 900 U.S. Highway 146 South in Dayton, right next to McCoy's. Well, thank you so much, Miss Patty. How are you today?
Thank you, Carrie. I'm doing great.
You know, there's a lot of new construction and home buying going on right now. It's very exciting to be able to service so many people and get them in their dream home.
That's right, Carrie. And one of the things that I'd like to talk about while you're out there looking at home, also kind of look at your credit score. That's so important. Even though you qualify, you might can better your rate. So the better and the higher the score, the better the rate. Or I guess the higher the score, the lower the rate. Know your credit score, know your credit capacity. And some people, they are confused because they go to Credit Karma, and that is a great way to track what's going on your credit report. But I just want to emphasize Experian, Equifax, and TransUnion are the three kings of credit. When you pull a report through them, that is not going to change. And sometimes people will get a false credit score, which it's close to what it is, and then we actually pull through the mortgage center a tri-merged, and that's going to be a consolidated credit report with Experian, Equifax, and TransUnion scores in there. And most mortgage companies, banks will use the lower of the middle scores to qualify you.
Well, that's some good information. And typically, what is a good credit score?
Well, a good credit score to get a good product would be anywhere from 690 to 700. And of course, 740, 800, 850 is going to get you a really nice rate. Anywhere from 600, sometimes you might get denied on that, but 640 and up would be a decent score.
Absolutely. And if you do try to pull Credit Karma, you can use that as kind of like a guide. If you see any inaccuracies that you want to take care of, it might lead you into wanting to run like a full report before you start trying to apply for a mortgage too.
Certainly. Actually look at that. Anything that you don't agree with, dispute it directly with the credit bureau. You're going to need to do that. But if it's yours, own up to it. The best thing you can do is own up to it, pay it back, get it current. Get comfortable with where you're at and where you need to go.
Good deal. And so what does it take to buy a house? Am I going to have to bring money to the table? How's this going to work?
Okay. When you're buying a house, a normal down payment would be 20%. But here at First Liberty National Bank, we only require 10%, and that 10% is not tied to PMI. PMI is private mortgage insurance. It's just like buying an insurance policy that says, hey, you don't have the other 10% down, and when you get it, I can get rid of this PMI. It's very expensive, but at First Liberty, we do not require that on all of our in-house products. We do only 10% down, and you're going to have cash. You're going to have, and we're going to verify that in a bank statement, in some kind of account, because you'll have to bring it to the table.
That's awesome. That's awesome. Now, is there a way to calculate, I'm looking at all these houses, and there's so many on the market, everywhere from $100,000 to $750,000 in a house. What's the best way for me to calculate how much of a house I can really afford?
Well, that's a good question as well, Carrie. You would need to do that with a debt to income. What a debt to income is basically your gross income divided by the debts. Things that show up on a credit report, installment loans. It does not include your utility payments, your insurance payments, unless you have an insurance loan. Anything that would show up on a credit report. And so it's basically a ratio of what you earn and what you owe. And the magic number that you don't want to go over is about, with us at First Liberty, is 48%. Some banks have a 43% debt to income. And so if you're higher than that, then they're going to deny you. And so we're proud that ours is not the minimum of 43, it's 48, which is allow you to maybe even buy, you may qualify, but you might can get a bigger house.
Gotcha. I may not know how to calculate my debt to income. Do I have the option to come up here and sit with the lender and go over things, maybe get a pre-approval? Because, people like pre-approvals.
Yes, that would be a great idea to do that. And it's actually a smart idea to do that. One of the things that you're welcome to call us, and our number here is 936-258-HOME. And we would love to go over everything that you need. And I'll quickly give you a scenario of what we ask for with an application. And to get you a pre-approval, we need the same items. And this would be, we would need your last 2 years' tax returns with all the schedules. We would need your W-2s, and we would also need the last 2 months' bank statements, investment accounts, retirement accounts, and we would need the last month's paycheck stubs. And on those stubs, it needs to include year-to-date totals. And with those items right there, we would need, that way we can do a debt to income, and then we can analyze if you have the 10% down payment, and then you'll know what you can afford. So when you're actually ready to shop with a realtor, then you're ready to go.
And so it's really exciting. You know, we just recently rebuilt our website, and there is a little mortgage tab that you can click on, and you can virtually start that process on the website by selecting a lender, getting all your information entered, and then that lender can call you back and complete the process with you, correct?
That is correct. You can go on our website and you can pick out a lender, or we have this thing called Zip for Home. You can pick a lender out and then you can deal with them directly, or you can just pick one and you can electronically fill out an application, and actually you can upload all these documents into that application. So the time we get it, we have your bank statements, we have your paycheck stubs, and we have any documentation that you have uploaded at the same time if you've made application, which would make it go quicker.
Nice. And I bet those sellers like to see a pre-approved buyer.
Yes, and in this market, most realtors do want a pre-approval. And I will let you know there's a difference between a pre-qualification and a pre-approval. A pre-qual is some realtors don't know the difference, but it's like you make an application and you state what you make and you state what you have in your checking account, and they just do a quick little scenario on that. A pre-approval is a hard approval, which means we have looked at all your financial information. We know you can qualify, and we actually they have qualified this based upon the financials that we've reviewed. And that's what most realtors want. They want a pre-approval because they don't want you to waste their seller's time or their time that you look at this property and then you can't get qualified.
Wow. And you know, there is so much new construction going on in our county and surrounding area. Honestly, my husband and I have talked about looking at property and trying to build something, but you know, we don't currently own property. Is there any way to buy the land, build a house, and just make it like a easy transaction?
We can do that. We offer one-time close constructions. You can actually at closing buy the property. We can close on the construction at the same time. And usually we do the constructions for a year, and then they automatically turn into a P&I payment if you wanted to go 30 years. And so you don't have to refinance that and add a bunch of fees. And used to, you would do a construction loan, and then you had that loan matured and you would have to do a brand new refinance, which caused more fees. And we love, and it's one of our most popular products, is to do a construction one-time close. It's a very good product for our area.
Well, I thank you so much, Miss Patty, for taking the time out of your day. I know you've got a whole bunch going on, and just sitting down and taking a few minutes to discuss this process with our customers and hopefully potential customers.
Well, thank you, Carrie. And we just kind of very lightly touched on some good points, but we would love a phone call or a visit in person so we can get down to the details and maybe get somebody qualified.
Absolutely. 936-258-HOME, 900 U.S. Highway 146 South in Dayton, right next to McCoy's. Don't forget to like, follow, and share.
First Liberty National Bank.